Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Tuesday, May 9th, 2023. Before we click through all the charts, please click like if you haven't already. It helps us a great deal in being found on YouTube when people search for Tesla analysis. Also, become a Wicked Stocks YouTube follower, subscriber. It'll provide you notification each and every time new content has been uploaded for your viewing. That includes the daily Tesla and the daily Apple report, as well as the occasional stock pick we put out on YouTube. And check out wickedstocks.com, where we offer a full assortment of daily and weekly videos analysis as a base subscription of $47. That includes the daily Triple Q, the daily SPY report, the weekly S&P 500, NASDAQ 100, long bond ETF, and the TLT, and 2 individual stock picks every week. On Monday, we put out a stock pick on waste management. You might check that out. You have a 5-day free trial, and so you can check it out for 5 days. If you don't like it, you can discontinue within the first 5 days. And you're not held to any long-term commitment, by the way, month to month. So here we are, weekly chart Tesla. The only thing I really want to say about this is in terms of the near term, which is to say between now and the end of June, we've got 196 and a quarter as a meaningful ceiling of resistance. It's actually considered a 2 to 3 week target right now following the settlement last Friday above this descending one-third speed line at 166.85. The speed line came into existence once the low was put out. Now, the low was put out at the targeted channel bottom at 150.76. So I could back up more and say how back in early April we had a couple of sell signals that indicated the low 50s as a 2 to 3 week objective. That objective was realized about 2 weeks ago, 150.76. That formation has performed well in containing, I'm going to call it midterm selling pressures, which was anticipated, able to contain selling on a monthly basis, possibly through June, and once tested, the resistance, the channel top that on the weekly chart is at 196.25 that I showed a moment ago, is roughly in the upper 190s on the daily chart. And so this area above 166.85 is now our 2 to 3 week target, as was indicated on Friday's settlement. And so we had some upside follow through on Monday, and I can jump to that right now. Sorry, wrong chart. I can jump to that right now. So I bumped 175.19 up to a session containment level. It was intraday only. We opened pretty much right at it on Monday morning and eased back off of it. It is a meaningful upside continuation point if we close above it today. So if we settle above 175.19, I think this 185.01 50% upside retracement February high against the more recent low from I think that's the very end of April. Yes, that was an April 27th low. That is 50% halfway back up. So 175.19 can contain session strength, and below which we can ease back to 166.85 today. 166.85, that speed line, able to contain weekly selling pressures, and above which, we'll just call it the mid 190s expected over the next several weeks. And so, you may have bought 195 out of the money calls that don't expire for at least a month. That is still the play right now, above 166.85. If you're a more near-term options trader, maybe it's the 185 out of the money calls that don't expire until the end of next week, for instance. And once again, if we close today above 175.19, we should, within 2 to 3 days, by Friday's close, reach 185.01, where we can top out for the better part of a week. If we push through or open above 175.19 today, 180.08 is in reach. And once again, closing above 175.19, 185.01. So for the 3 to 5 day swing trade, closing above 175.19, that is another signal to go long. We had one on Friday's close above 166.85. That was also a 3 to 5 day swing trade to the upside, being long into later this week. Closing above 175.19 lends a validity, a greater validity, you might say, to that projected rally to 185.01, and that should be within 2 to 3 days. And once again, I will say that if we close above 175.19, probably inside of 2 weeks, that we would reach the mid 190s. I say mid 190s because I go back to the weekly channel top that is at 196 and a quarter and dropping gradually. So with respect to this image, once again, we have minor points in the immediate vicinity, 173.54, 171.21, and 169.19, all well suited for aggressive day traders. Holding below 175.19 does allow 166.85 today, which is really the start of a narrowing zone. I've thrown this new channel bottom in at 164.05. It's kind of a range that actually all comes together in the next couple of days. But for today, it's 2.80 wide and narrowing daily. Can contain weekly selling pressures, and only if we close below 164.05 am I comfortable playing the short side for the next few days, 3 to 5 days, back into the low 150s. So yes, we can retest 150.76 midterm support, possibly by the end of the week if we close today below 164.05. Until then, that is a base of support that begins at 166.85 that can contain weekly selling pressures and above which the 2 to 3 week time frame remains bullish, anticipating the mid 190s, that 196.25 channel top by the end of June or sooner. And now it's actually sooner now that we're above 166.85. But if we close, yes, closing below 166.85 is not a great sign. Doesn't look good for bullish continuation as we move into later week. But in terms of bearish continuation, in terms of a clear-cut sell signal, that would come with a settlement today below 164.05. And then, yes, within 3 to 5 days or less, 150.76. 150.76, that channel bottom we tested a couple of weeks ago, week and a half ago, April 27th. Still the beginning of a narrowing zone of meaningful midterm support down to 146.06 that can contain selling on a monthly basis. And once tested, the market inclined to rotate upward to the channel top that is presently in the upper 190s and dropping. In terms of expecting longer-term weakness, which is to say into June, bearish continuation, back to that 101 and change January low from earlier in the year, that would come with a settlement below 146.06. And so if we did, and I'll say, yes, even closing below 150.76 is not a great sign. If we close below 150.76 and certainly below 146.06, any out-of-the-money options you may have acquired over the last couple of weeks, having tested midterm support, you may cover and reach perhaps for 101, 102 out of the money puts that don't expire for at least a couple of months. I would expect a full channel extension down to 102.28 and dropping, actually converges very soon with this 101.81. This, if closed below 146.06, would become our 3 to 5 week objective. Could take a little bit longer, where we could actually double bottom perhaps through the third quarter. But we are a long way from that right now. The image I would like to leave you with, this is one of them. We are bullish into June above 166.85. We're bullish anyway into June above 150.76. It's just that if we close once again back below the 164.05 level, we revisit the low 50s. But until then, holding above 166.85, bullish. And once again, if we close today above 175.19, yet another reason to go long, stay long into later week, expecting 185.01 within several days. And over the next couple of weeks, the targeted 199.24 formation dropping ever so gradually, where we can top out on a monthly basis and fall off from. But I don't want to get too far ahead of myself. Pushing 9 minutes. I'm going to leave it at that for Tuesday's Tesla Report. You have a great evening. Please click like, subscribe, and check out wickedstocks.com.